welcome back to my channel. So today's video is all about an investment strategy that may be utilized in order to secure $250 a day, or you may set that goal to be $250 a week, just depending on where you're at within your trading and investing. So I definitely want to provide this video just to give like full context on how you can grow your account. So I'm going to first start with just going over the steps really quick. And then in the second half of this video, I'm going to break down each step in detail. So starting with step one, of course, first you'll need to determine your initial capital investment. And we all know that this can vary from trader to trader. Every investor will have a different amount that they're starting with. Somebody may have $1,000, somebody may have $5,000 or $10,000. It all just depends on, your financial situation. Step two is going to be setting your risk tolerance. Essentially, we know this entails having a stop loss set and then also your take profit target predetermined before you even enter into a trade. Step three is all about finding contracts that fit your trading plan, and this entails making sure that those premiums are going to be affordable. Step four is looking for high probability setups. Again, that's the only type of setups you should be trading. You should never trade anything that's not going to be high probability because it's not to your benefit. Step five is going to be trading zero DTE or at least small DTE just to help grow your account. And I always recommend this for new traders simply because, again, it's affordable. The contracts, when they have a smaller time frame of expiration, they're a lot more affordable. And then step six is going to be analyzing volume, IV, which is implied volatility, open interest, momentum, support and resistance. All these great factors are going to need to be evaluated prior to entering into any options trade. And then step seven involves entering trades that are backed with at least 3 forms of confirmation. So whether that's your technical indicators, whether that's a chart pattern, or whether that's you just simply understanding how the flow of the stock in the market is working in your directional, decision making. And then step 8 is going to be never chasing the charts. I can't stress that enough. You never want to chase the chart, so we'll talk about that. So what I'm going to go ahead and do now is transition into going into detail into each and every one of these steps so that by the end of this video, you at least have a game plan on how you can start to become a profitable trader. All right, so starting with capital and risk tolerance, of course, step one, as mentioned, is going to be deciding on whatever your goals are based on your financial situation. So you want to make sure you have sufficient funds to start because, again, y'all know the old adage, it takes money to make money. So whatever financial situation you're in, just make sure you tailor your investing and trading strategy based upon that. Now, step two, of course, is the risk tolerance, which I spoke about so many times in the past. I always recommend having a stop loss set and, of course, having a take profit set before you even enter a trade. You want to make sure you have those levels predetermined. That way you have a way to get in the trade and an exit strategy to get out. You want to make sure this also aligns with whatever financial objectives you have. So your total capital should always be increasing. You don't want to have those days where you're consistently in the red. Don't get me wrong, everyone's going to lose a trade. But if you have your tolerance set, then you're not taking major L's. So that's going to be step one and step two. So moving right along to premiums and high probability setups. So with step three, of course, it's about finding contracts that fit your trading plan. And of course, they need to be affordable. And in just a second, I'm going to hop into Thinkorswim so that I can show you essentially how the DTE plays a huge factor in the affordability of contracts. So again, you want to make sure that the strategy is set for those contracts to be priced within your means. And then, of course, this also provides the opportunity for potential returns to meet your trading goals. And then step four is looking for high probability setups. Now, this essentially means you're identifying those trading opportunities that have the highest possibility of being successful. And this is based on technical analysis. It could be the market conditions or any historical patterns that you've picked up on. Now, that's going to be the focus for setting up the favorable risk to reward ratio. Some people have a 2-to-1, some people have 3-to-1. It just depends on the investor and the trader. Whatever you need to do to maximize your profits, that's what I would say, just kind of, move forward with as far as your idea and setting it. And you can always change it based upon the level of understanding you have as you grow as a trader. Okay, so I do also want to mention that it's important to have a trading strategy. Now, if you're brand new to trading or if you're still a beginner, you may not have a specific trading style developed just yet, but it's okay because it will happen over time. But I want to provide the information that way you kind of can see maybe if you want to lean in one direction or if you want to combine them. So the 3 main types of trading styles that you'll see most traders adopt are either going to be breakout traders, They'll either have a momentum trading style or they'll trade reversals. Now, again, some people trade a combination, and that's completely fine. Me personally, I like to choose the ones that have the high probability setups with either one of these strategies. So, to explain what a breakout trader is, this just means that someone is essentially watching the charts and they're looking for the price to move beyond a certain level of support or resistance, and then they anticipate the motion will continue in that same direction. Now, when you look at momentum traders, they're looking at entering into a trade if the direction of the prevailing price, meaning the current price, if that has an expectation for the momentum to continue, then that'll drive the price further in that direction because the momentum is pushing the stock to go either extremely bullish or bearish. Now, when we look at reversals, it's exactly what it sounds like. So this is someone who's watching the charts and they're anticipating that there will be a price change and that will reach a high or a low point, and this is going to signal a shift in the market momentum, hence why it would reverse. So these are going to be the three types, the main ones that you'll see most commonly. And again, you can adopt one, two, or if you want to have a combination of all of these styles, completely fine to do so. Again, if you're brand new, it will take some time, so don't feel like you have to rush and develop a style based upon one, two, or three of these all at once. So just give it some time. All right, so next up is going to be DTE and market conditions. Now, again, trading with zero DTE or those small time frames, that's one of the things I always recommend simply because of the affordability of those option premiums. When they have a shorter time frame of expiration, it's also going to come with a smaller price. Now, again, there's going to be so many people who are like, well, if you're swing trading and you're trying to build your account, this may be a good idea to do it this way. And again, it's whatever you choose. I'm just providing this strategy because I know it helps and it actually works to build an account, especially if you're having a goal of $250 a week or a day. So making sure your DTE, and again, I'll provide that example in Thinkorswim. Now, with step 6 is going to be analyzing the volume, the IV, again, the implied volatility, open interest, all these factors that are going to play a huge part in whether or not you're successful when you trade. So we know volume is going to be assessing the liquidity. IV is going to be the potential price fluctuations. Open interest is the level of market activity. And then momentum tracks the strength of a trend. And then support and resistance, again, is going to be those things where we're looking at those price levels and you're determining if there's going to be a break of support and resistance or if the stock or ETF will respect that level of support and resistance. So again, just analyzing these elements is going to help you make that comprehensive choice within the overview of the market conditions. And this all helps with trading efficiently. That's what the main goal is. You want to make sure your trading strategy is completely efficient, at least as much as possible. Okay, so I have Thinkorswim pulled up, and of course I'm hopping in here to show you guys exactly how the DTE will affect the option premiums. I'm going to go ahead and just collapse this little sample watch list. I'm going to click on option. And again, this is me just showing you guys the DTE differences in the pricing. So you can see that NVIDIA is what I have pulled up. It's currently trading for $106.47. And I'm going to go ahead and hit the drop down for September 13th, which is going to be 3 days out of DTE. Now we're going to go ahead and take a look at the calls just for example purposes. We're going to look at the strike price at 107. We can see here that if you were to buy the bid price of this particular contract, it would cost you $243. And if you were to purchase the ask, that would be $247. And again, this is at that 107 strike price. Okay, so we see that's for 3 days out of DTE. So let me go ahead and collapse this. We're going to take a look at, let's say, maybe 31 days out. Let's look at October 11th. Okay, so I'm going to scroll down and we see that for the same strike price at 107, the bid price is going for $675 for one contract, and the ask is going for $690 for one contract. So you guys can see the stark difference based upon the time of expiration. So that's why I always recommend new traders, if you're trying to build your account, avoid swing trading just because you can't purchase as many option contracts at once if you have limited capital. So it's a good idea to stick to those smaller time frames of DTE. That way you have the opportunity to purchase more at once for your contracts. And again, you can build that account much faster. So yeah, I just wanted to provide this example so that you guys can see again on the charts. It's showing you exactly what you would need in order to make sure that you're trying to hit that $250 target per week or per day, whatever you choose to set it at. All right, so last but certainly not least is going to be confirmation and patience. So within step 7, of course, I always make sure I explain this to new traders. You want to have at least 3 forms of confirmation before you enter into any trade. Now, this is going to help you support any decision that you want to make based upon what you read on the charts. So this can be confirmation from multiple indicators, it can be signals, and you want to combine technical analysis of patterns with the trend confirmations, and then of course volume, open interest, all those good technical tools. And this is useful because those forms of confirmation, it'll help reduce the likelihood of false signals and false breakouts. Now, it's not 100% effective because, again, the stock is going to do what it's going to do, but at least you can increase the probability of being successful within the trade. So again, make sure you have at least 3 forms of confirmation. Don't just hop into a trade just based upon someone's call out and maybe like a Discord. You want to do your own technical analysis and just evaluate the charts for yourself. And then last but certainly not least, never chase the charts. Like, I don't know how many more ways I can say this. You don't want to enter into trades with any type of like FOMO, or if you have any type of like emotional feelings within the trading day. You want to leave all that to the side. Don't chase the charts because it's not going to be to your benefit. So always stick to your trading plan and just wait for well-defined setups. This could take some time. There's opportunities for you to enter into trades at any time that the stock market is open. So don't feel like you have to enter a trade before 10 o'clock or you have to enter a trade before noon. Whatever makes sense for the setup, that's when it's best to trade. Okay, so me personally, I never chase the charts. So I know this was kind of a quick video. I will expand on each one of these steps in a future video, but I wanted to provide this information for those who are beginners and are struggling to kind of just understand how to make that initial step into, being profitable. But of course, I'll provide more detail in future videos. So if you have any questions or comments, any concerns, just leave them down in the comment section. And that'll pretty much do it for this video. I thank you so much for watching, and I'll see you in my next one.